It's Brian Preston, the Money Guy.
All right, we have a question from Paul. He says, how do you evaluate if a life insurance plan is good? He said his parents have two different ones and he's not sure if they should keep them. So when you're thinking through what that big life planning purchase decision, how do you know if it's a good policy?
First, I want to give this is a big one. So hear me out on this. Is don't cancel any insurance policy unless you do a lot of due diligence and measuring. Because realize life insurance is one of those things where at the moment in time that the person applied for it, they go typically do underwriting on it. Look at your health situation, ask you a bunch of questions, even send something to your doctor to get them to confirm some things about you. So that's a lot of work. There's a lot of process that goes into underwriting life insurance. So just because you have the thought that maybe you're overpaying, don't just go out there willy-nilly saying, well, I'll just get rid of this and now I'll start working on getting, because maybe you're just not in the same physical shape that you were, or things have changed to the point that you can't replace what you already have. So that's why this is one of those things where if you're having the consideration of evaluating and replacing insurance, there's a whole processes. There's even when you notice when you're applying for new insurance, they're going to ask you questions about this because there's several reasons. They want to make sure you're not getting churned by an insurance agent, from a compliance standpoint. But then the second thing, they want to make sure you've really thought about what you're doing with this life insurance. So that's the first thing. How do you evaluate? But it is one of those things where it's not uncommon that you have to kind of first go see if you need the benefit, figure out how much life insurance you need.
That's great.
And then after you figure out the need, you can now figure out price elasticity, or how good this pricing is. And typically that leads to, you kind of have to go shop it. But remember, you don't cancel. You go shop it and see what after they underwrite you, because even though you go and get the medical exam and everything else, they're not necessarily offering you insurance until that moment comes, and that's when you can lay it against. I'd be interested, Bo, you have more background in actually working in the insurance industry. I kind of gave the overview thoughts. Give me the inside baseball thoughts.
So here's what's really stinks, right? Insurance industry, our industry, the financial industry, has made these products incredibly complicated. Term life insurance, super easy. You buy it, you pay for it for a number of years. If you die in that period, you get the benefit. That one's really easy to get your head wrapped around, easy to shop, easy to compare. When you have other types of policies, perhaps it's a policy you bought 15 years ago or 10 years ago, or your parents bought it for you, it gets more nuanced because they are not all created equal. And frankly, they are complicated. And in my opinion, they are complicated by design. I'll share a real world practical example that happened last week. I have a client and they said, hey, my mom has this elderly mother has this life insurance policy in place where you take a look at it. Now, it was actually a variable annuity, but it had a life insurance benefit on it. And it's like, hey, we could surrender it. I have some questions. Is it expensive? Are the investments good? And there was one other question they had. And so I looked at it and I was like, yep, it's expensive for sure. Investments are not good. They are very poor performing, really expensive, super active, don't love it. And then I forget the third question. And so they responded to me and said, okay, great, we're just gonna go cancel it. And I was like, whoa. Hey, before we do that, this product, this policy, something that's been in place for 15, 20 years. I don't think we can just get rid of that because there's some stuff on this policy that I don't understand. Why don't you let me and your mom do a phone call to the insurance company and ask them questions? So we did that. We called the insurance company. Well, it turns out there was this small little benefit that she had bought that, one, allowed there to be this enhanced death benefit on it, and two, allowed her to activate this income stream, right? Where if she just activated this income stream, she could start pulling money out of this policy for the rest of her life. And this is the kicker. This is what's crazy. So long as the cash value of the policy never crosses below $2,000, and there was a decent chunk of money in here, so it would never cross below that, the death benefit would pay out $300,000.
Oh, wow.
So they were going to surrender this policy for like tens of thousands of dollars and unknowingly walk away from a $300,000 benefit and a lifetime income. Now, I'm not suggesting that's some great product and you should go out there and buy it and it made sense. It probably didn't. However, once they were in it and once they had gotten past all the hard part of it, you don't want to just willy-nilly throw these out, because back in the day, insurance companies wouldn't write policies based on today's life expectancies. They were based on life expectancies 20 years ago. And so things have changed. So you might actually have a product that it makes sense to utilize one of the benefits or activate something in it. You can't just be willy-nilly without understanding exactly what's going on with that policy. I know that's a hard and difficult answer, but it can be a hard and difficult thing that has a lot of impact on your financial security in retirement.
Well, there's several things that jumped in my mind. Is that your physical health you might not be able to just get insurance,
That's right,
so that's another reason to be careful. And then also, people just when they talk about just surrendering policies, I'm like, realize policies are especially expensive in the first few years. And if you've already made it through all those high commissions and all the other fees, a lot of times people are shocked when I say that policy, you might just need to ask the insurance company, is any of this portion of this paid up? Meaning if the cash value, if the cash value is built up to this much where it's got its own income being created annually, you might be able to just say, look, if the premiums annually are what I'm just tired of paying, but I've already paid all the high commissions, all the high expenses on the front end, why don't we call the insurance company to see, hey, as a portion of this that can just be paid up, meaning that I no longer make insurance payments, it self-supports itself, but I don't walk away from all of the benefits that I paid for years ago, but I did free myself up from some of the annual cash flow and the things that are really annoying me. This is a nuanced thing. I got to tell you, this is one of those complex things. Be very careful as you're working through this. It might even make sense to graduate to the next level and talk to a professional because you just don't want to screw this up. I mean, because there's a lot of things that can go into this that you can fall into a trap or just make an unintended mistake that you can't get back.